Hi, welcome to this video. David on the 20th of June. It's Sunday. It's our weekly Forex forecast. We're just going to pick out some pairs which we think could offer really good risk to reward trading opportunities for the week ahead. We've got 12 pairs to look at. We'll go over the charts in just a moment. Now, in last week's forecast, we felt that there was going to be a big dollar rally. Market just too short and bearish of the USD. And we saw a great rally in the USD, best week in 13 months. And, I personally feel dollar has more strength to come, but we could see corrective action. Short term's just a little bit overbought. Pullbacks will be buying opportunities. We're also looking for the yen last week to firm up behind the dollar. Yen has shown some strength. I think it's going to show a lot more going forward. We also like the look of the pound in some crosses. Last week, overall, great week for trading. That's because we got higher volatility after what had been a really dull few months. I'm hoping the volatility will stay high as we move forward, which I think it will. We shall see. But right, let's go and take a look at the trade setups. But just before we do so, please do keep in mind, it is my view as of right now. It can of course change in line with market action and conditions. If you want all our trading techniques and you want to see our daily technical sentiment analysis of 14 FX pairs, all you need to do is click on the link beneath this video to get live access to our member center. You can also follow us on Facebook, join our Facebook group of traders, and check out our recommended regulated ECN broker. I'm going to use the charts from our member center, just doing my updates for the weekend. I'm going to start with the pair that really interested us last week, which is USD CAD. Right, USD CAD daily chart, and this one, this pair we picked out last week as our favourite, the one we wanted to put our biggest bet on, so to speak. And it's a trade setup that offered low risk and really good profit potential. It's moved nicely for us. Just for anyone new watching our videos, just want to explain why this trade setup was so attractive. We had the big fall here, and then speculators build up their biggest short position in a year. And the market, if you read the media, they were all saying the USD is probably going way lower. But it didn't. It just travelled sideways. Poke at 120 here, 120 here. Big monthly support. No sellers. Okay, so we felt that the dollar would work its way higher. We got a position in at 120.50. And we did come up. When the Fed came, we added above 122. And nice blue after the Fed. The speculators have got a huge short position. They're probably going to get run on stop. So, so far on the first position, 400 odd pips. And the second position, obviously, doing well as well. And, I think there's more strength to come in the USD. We're just probably a little bit overbought in the short term. So, could come back to 124. Big support is 123. 126 to first target, then 128 second target for us. So a really good trade, and there should be more upside in our view. Dollar very oversold on the CAD. Look at this. This is the monthly chart. Big move down. There's the monthly level. Okay, the 120 level. Obviously the tail over there, just over here as well. Two tails, and then the bounce. But in the big scheme of things, I think the dollar now has confirmed a trend change to the upside, and we're going to see a considerable amount of this fall retrace. Now, in terms of the CAD, it is a commodity currency. It's obviously taken its first hit because of the Fed being a little bit more hawkish than expected. But what about the outlook for commodities? I personally think commodities are due a big fall, which is going to really weigh on the CAD. We've seen some weakness. Let me show you some charts here. Copper, this purple line, a little bit of a rollover. Gold, good rollover. Okay. The general Bloomberg commodity index is on the bottom chart, the green line. Really nice move up, and now she's rolling over. Dollar index is coming up. Okay. The dollar continues to strengthen. Commodities will come down. Okay. This gap should narrow. If we look at the Bloomberg Commodity Index again, but with a channel drawn on it, this is from the market here, you can see we come through the 200-day moving average. We can take out the bottom of the channel, we should go down to 83. Speculators hold their biggest long position ever. Open interest is at its highest ever seasonally. You can see it, the red line. This is commodities for 2021 compared to 2020. The blue lines, those specs should get run on stop, and that should help the USD not just go up on the CAD, but two other commodity currencies we're going to look at in a moment, the AUD and the ZAR. So yeah, maybe some corrective action, but I think we are going to see more strength in this pair. Right, let's have a look at the next pair, and that is going to be another commodity currency. It's going to be AUD USD. Right, AUD USD, and in terms of this pair, we were saying it last week, if we take the price action from April, it was just very messy, choppy, sideways, one just brief move above 79. In this period, if you read the media, they were saying, oh, well, the Aussie should be going up to 80 or higher because commodities are firm, stock markets are firm. That normally helps the Aussie dollar. But Aussie wasn't going higher, so we felt the odds were for a break to the downside. I did say last week we came in with a position at 77.80. It was here, and we held it. But really, let's get ready to get rid of it actually, because it's just sideways. Okay, we held. And then with the Fed coming up, we expected a rollover. We did get the 76 level taken out, big level, okay? And then we follow on, so we can add on the breakout, okay? Core position, similar profit to USD CAD. And I think a lot more downside to come. You can see my target 70, okay? In the short term, a little bit oversold. We could bounce back, test this 76 level. But longer term, I feel we're going down to 70. So hopefully, well over 400 more pips. And I think it's a good idea to look at the weekly chart in terms of the Aussie dollar, because we can see is here on my cursor is we fell from 70. Then we really sold off on the pandemic. Then we roar back. We come up to 70. We struggle to get through it a bit. Then we get through it. Come back. We find support at the level. Speculators pile in long. We go higher, sideways, down. That is probably fair value for the Aussie. Commodity prices, a lot of them have moved down. But one commodity that's very important to Australia hasn't really moved down. It's iron ore. It's 45% of export revenue. And look at it, it's a parabolic rise. We just see a little bit of a correction. This is the weekly chart, but in the big scheme of things, this has been the top performing commodity, and you'd say it was a clear uptrend. But despite the strength in iron ore, Aussie's going down. If iron ore breaks down, that's really going to weigh on the Aussie. And I think, speculators heavily long going to get taken out and stop. Chinese demand has effectively peaked, and we could go here, 120. Okay, if we really gain traction to the downside, that will really weigh on the Aussie. 120, probably fair value for iron ore. If we fall towards that level, that will really help the Aussie get to our target. So we shall see. But I think trend change has been confirmed. Next pair, which one should we go to? Let's have a look at Euro USD. Right, Euro USD, daily chart. In terms of down here, 117, we push off. We get above the 120 level, pull back and find support at it, then push off above 120. We got above 122. We just couldn't power on to the upside. If you read the media at the time, they were saying, not all, but the majority were saying the euro could push up to 125. Couldn't even get up to these previous highs here at 123. We rolled over. Last video I was saying just take a break of 121. This is the Fed candle, and we follow on to the downside. So decent move to the downside. I still think there's more to come, probably about another 200, basically 260 more pips. But I would say we're probably going to get a bounce in the short term back to the 120 level. Okay, now in terms of a bounce coming, we're obviously short. We do think there is a bounce coming, but are we going to bank our position and go long? The answer is no. What we'll do is we'll take half off, okay, to reduce our exposure. We've got decent open profit, And then, if the bounce comes, we come in at a better price. If it doesn't, we're still in. Okay, makes it easier to hold long-term trades. So always running multiple positions. We've done the same in the previous pairs that we've looked at, and the ones we're going to look at in a moment. Always take partial profits. Then, gives you that psychology to hold the bigger moves, which we all want to catch and hold if we can, of course. Now, 120, and then I think we'll be off to the downside again. In terms of market has been very, very bullish of the year. There's all big money long up here, and I think a lot of that's now come out. If you read the media, a lot of people are saying how great Eurozone is doing economically. It isn't at all, because the poorer nations are not recovering. And the ECB are having to do huge stimulus, printing money, which is bearish for the euro, just to keep liquidity for the poorer nations. I just see the euro fundamentals as out and out bearish. So I think, possibly a bounce and then lower prices. I'll just go to the weekly chart, actually, and I can show you, obviously there's the big rollover. This level here, 116, I think we're going to go to. We could run on this really big support level down at 114. We'll have to see how we go. But we're just very bearish of the euro. Now, last week I did say felt this is a good trade setup, but we prefer generally being in the euro proxies. Why? Euro correlated currencies, if the euro is going down strongly or up strongly, they will very often move quicker than the euros. They offer you a better reward to risk on most occasions. Okay, that's just our view. But proxies, really like them. The one I picked out last week was USD PLN. I still think this looks a great trade setup. Came in long here on this blue. We push up, accelerate on the Fed, then a follow through, and then a slight pause on Friday. But go through the high, we'll be off the upside, I think, and this double trend line here dips back to that, will be held. Okay, so I really like the look of this trade, going up to chart highs and off the top of my screen to 420, and the stop could be tucked back behind here. Okay, so really good looking risk to reward trade in our view. The other proxies look good as well. We just picked this one out as our favorite. Czech krona looks good, and the SEK, so USD long against those two, if you want to go and take a look at them. Now let's go and look at our first yen pair, which is going to be Euro JPY. Same felt, the yen, last week, it's a hated currency. Okay, speculators heavily short of the yen generally. We just felt that the yen, if the dollar firmed up, the yen would firm behind. And in terms of Euro JPY, nice candle down on the Fed. Really big follow through one there, and then a quite nice third candle. I think here you might get a bounce back towards this 132 level. Okay, but I think we'll get down to 128, might get down even lower. Now, in terms of, if you think the US dollar last week was really hated coming in to the Fed, and it mounted a big rally because speculators were just too short at the dollar. The yen is the same. Speculators are too short, but what's coming into the mix now is a bit of caution in financial markets. So a bit of risk off, a bit of risk aversion. A lot of traders, investors will buy the yen. It's the number one safe haven currency. So you've got speculators coming out and people buying it kind of as an insurance safe haven. It's really historically undervalued at the moment as well. So the yen for us, more strength coming as we move forward. Now, in terms of USD JPY, I don't really want to trade that pair because I'm bullish of the USD and the JPY. There's no risk to reward there for us. So it's the yen against the euro, the commodity currencies. Now, in terms of the next yen pair I want to look at, it's going to be CAD JPY. CAD JPY bounce from here back in April. Speculators pile in heavily long. Yeah, big push up to try and take out the 90 level, or sorry, 91 level. Can't get through it, and then we come down in low volatility. And again, obviously with the Fed going up, felt we would break low. That's the Fed candle, that little red. I thought we'd have broken 90 on the Fed, and we didn't. But we followed through the next day. Now we followed through again. CAD, most overbought major. Speculators are heavily, heavily long of the CAD. And we've seen some downside in the CAD. But I think we could go to 86, then even 84. Okay, a lot of specs to get taken out on the stop. I think we've started. There's more to exit the market. So I really like look at CAD JPY. Let's look at another CAD pair before two USD pairs to finish up with. Which pair do I want? Sorry, it's GBP CAD. Where is it? There it is. We looked at this one last week. It's the one that really just didn't do anything of the ones we looked at. Yeah, you got some blue candles, but the volatility is just so low, isn't it? The pound, it's kind of worked its way higher in a choppy fashion. Next week, I'm looking for it to break these two candle tails above the 172 level. So 172.40. If we break, we should get follow through up to 174, then 176. I like the reversal of this level here. Stop can be tucked behind the double trend line support. So hasn't done anything yet, but next week we'll see. If we break higher, I think we'll switch to higher volatility and move sharply to the upside. Two pairs, USD pairs to finish off with are USD CHF and USD ZAR, which I'll do in a moment. Now, in terms of the CHF, USD, there's the breakout candle on the Fed. We followed through, a little bit overbought. If we dip back to this level, I think we'll find support. 91, really big support level. Now, I put 94 as my target, but I think I'm going to extend that up to 98 or possibly even the par level. I think this could be a significant trend change. Okay, I'm certainly looking for these these highs here to be targeted, but I think we could move even higher. Okay, now in terms of this pair, I said last week it's not the most volatile pair. It does have good trends. You've got a nice big uptrend there, nice downtrend there, and then hopefully a nice uptrend again. So we'll see. But like the look of the USD long. 91 really solid support in our view. Last pair, fast moving pair, USD ZAR. The emerging market currency we like the best to sell. Reason why? Basically the ZAR has been the strongest currency of all over the last few months, and I just feel USD is gonna it's already started to move higher. We should get back up to recent chart highs. There is a commodity currency as well. We're bearish of commodities. It's an emerging market currency, and if the dollar does have broad-based strength, it's normally the emerging markets that get hit the hardest. Okay, we picked out the ZAR. This is good support here, and see if we can get to our targets. A lot of speculators are still short of the USD. We're seeing some get taken out and stop. I think there's more to come. They're the pairs that we really like. We'll see what happens in the week ahead. I think, last week that switch up in volatility was great because the markets had been very dull. I think the markets now, the reason the markets were so dull is because they just did not believe, or the majority, that the Fed would actually hint they're going to cut back stimulus or do interest rate hikes. Okay, which of course they have to do. They're a central bank. They have to deal with inflation. So I think you're going to see the market not just focus on, the dollar won't go up because the Fed won't let it or they'll hold it down. I think you're going to have a focus on the fundamentals of other countries as well, which I think have been ignored by many traders or investors, like the poor fundamentals in Eurozone, for example. Anyway, we shall see. Hopefully that last bit of conclusion made sense. Anyway, we'll see what happens in the week ahead. Thank you for watching the video. Take care and have a good day.